this is going to be a year of transition, and it is going to be a year of volatility.
Julia Lee, Happy New Year. Welcome back to Dukascopy TV. It's a pleasure to receive you.
Happy New Year. It's fantastic to be here again. Thank you.
Thank you so much. Okay, so let's get started. Investors came out on top following China's GDP data, despite it ever so slightly missing estimates. What does this say about perhaps the psychology of the Aussie investor at the moment, given particularly we've seen 2 weeks of China-led volatility?
Look, I think the Chinese numbers were interesting. While the GDP print year on year was on expectations, the industrial production, the fixed asset investment and the retail sales numbers actually missed expectations. And I think a bigger question for investors and traders out there is, are the Chinese numbers believable? If you have a look at the last 6 quarters of GDP growth in China year on year, you know, the numbers are 7.2, 7.2, 7, 7, 6.9, 6.8. And it almost seems like, you know, China's manufacturing a slowdown in terms of the numbers. So that's one question I think a lot of investors and traders are asking for. But I guess one thing is certain is that China is slowing down, and that increases expectations around more stimulus from China, which may have a little bit of a stabilizing effect, given that we have started off the new year on such a terrible note, especially with the devaluation in terms of the Chinese currency and the added volatility that that's likely to add to this year coming through from China.
Now, you've commented in the media lately that you believe that the sell-off in equities in the US and also in the local share market here in Australia have been oversold. Do you maintain that stance?
The markets are oversold, given the strength of the downward movement that we have seen in 2016. So both the S&P 500, the ASX 200 in oversold territory. I think the problem is that bear markets come from oversold positions as well. So not only do bounces up, but bear markets as well. And one key factor is if we see a worsening in terms of the economic data coming through. And that's certainly the case from the US, where we have seen industrial production, retail sales disappointing, and also the earnings season. This is going to be the 4th consecutive quarter where we do see a declining growth in revenue, and the 3rd consecutive quarter where we see a declining growth in earnings. So I think there are some concerns despite the move, and you know, usually we see a bounce back from these levels, but I think we're at a critical level in terms of what the world expects from economic growth. And certainly the IMF has been quite vocal this week in once again downgrading expectations around global growth. This is the 9th time and the 3rd just in the past year.
Now, amidst what is generally a bearish market, we have seen sporadic bounces in the telcos, in some of the consumer staples. Is this bargain hunters diving in? You know, are there still good opportunities for investors?
Well, firstly, even in a bear market, the market's not going to go down in a straight line. In fact, we're likely to see some very big rallies. For example, the Japanese market from 1989 till now, from the peak to the trough, 80% deterioration in asset value. However, from 2003 to 2007, the market increased 125%. So it isn't just going down in one straight line. So there will still be an opportunity, and the market has become overly bearish. But I think the second thing to remember about this type of market is that the volatility is probably here to stay. So it is going to be a difficult market, and if it's a difficult market, then the sectors that traditionally outperform are the defensive areas. These are sectors like the healthcare, utilities, consumer staples, and high yielding areas, and they're the areas that have outperformed in 2016. So in the first 2 weeks, if you have a look at the best performing sectors, they're all the defensive areas: staples, healthcare, utilities, and property. So usually investors in this type of market either look for a high dividend yield to buffer against those capital losses, or they look for those defensive sectors which are likely to have that stable cash flow.
So if you are seeing across the board sort of overselling, when do you see the market returning back to perhaps that fair value level if we look at the majority of the year that we still have ahead?
Look, I think this is a major transition year for both the US economy as well as the Chinese economy, and that's having a big bearing on sentiment at the moment. For the US, it's a case of that raising interest rates and trying to normalize the situation. They've been in an emergency setting now since the global financial crisis. So So that's going to have implications for the US economy and for earnings growth coming through from S&P 500 companies. And then you look at China and the revaluation of the yuan and the concern around credit growth, which has gone from 150% of GDP back before the global financial crisis, now to debt being 250% of GDP in terms of China. So the world is grappling with these problems, and that's being reflected in things like oil prices, commodity prices. So I think this is going to be a year of transition, and it is going to be a year of volatility. Usually markets return to an area of fair value either when there's stimulus to help support asset prices, which is one possibility, or secondly, after you see a clean out of the markets, a flush out, which we didn't really see after the global financial crisis. Instead, we saw central banks stepping in, and that's why it's so important to watch what the central banks do, because they have been a key support of the market since the global financial crisis.
Julia Lee, many thanks for the update.
Thanks, Natalie.
Julia Lee there of Bell Direct giving her forecasts for the equities year ahead. That is all we've got time for right now. I'll be back with plenty more interviews for you right here from the heart of the APAC region. I'm Natalie MacDonald. You've been watching Sydney Direct on Dukascopy TV. Goodbye for now.